Okay, so today I'm going to show you my entire strategy in full detail so you can learn exactly what I do and how I enter my trades. So here we go. Okay, so once we've established the asset that we wish to trade and established that we've got 2 days of downtrend in this particular case here, we then need, and we've established our target levels down this zone, which will match some sort of levels previously to the left. Then we need to determine where we're going to put our stop losses. Now this is very important because incorrect placing of a stop loss will mean our R to R will be reduced. But we always want to place the stop loss level above some sort of previous level here. As you can see in this example, during the Asian session it pulled up to here at a double top, rejected into the London session, which is where we're entering from the pullback. So we want our stop loss to be above this level here. And that just makes sense because you've got this level here. If a trade pulls back past this level, you know you've got the trade wrong and we're going to take a hit. If it remains below this level, then everything is good and we're okay to carry on with the trade. We will monitor the trades whilst they run as well. For example, when we reach a running profit of 1R, so we're currently running a profit of 1 value of our risk, 1R, we will pull the stop loss to half, just like this here. There you go. So now we're only risking half an R. So for example, if 1 4R was $700, we're now only risking $350 as the running profit goes into 1R. For our stop loss now to be hit, price action has to return by 1.5 Rs back to take us out at a minus half R. We're only risking half the risk and price action would have to pull back so far. The chances are it's probably going to hit our full stop loss anyway if we'd left it. So, but it still gives us that bit of leg room in case it pulls back to the original entry. As we all know, a lot of times that will happen. It'll come back to the original entry, take you out of break even and then run. Doing it this way gives us that little extra breathing room for the trade just in case. And that's it. We'll go through a few more examples now. Okay, so here's another example here. We've got the pound Australian dollar, this time in a long setup. As you can see, we've got day 1 currently going long, followed by day 2 going long. So that is the setup we're looking for. We're looking for a 2-day trend to enter the trade on any pullback for continuation. Simple as that, nothing too special. We're trending upwards, so we're waiting for a break, a pullback and an entry to continue the trade in that direction. That's all we're looking for in these, nothing too drastic. So day 1 is Wednesday I believe, 19th of March, and we went on to Thursday here. And as you can see, the general trend was up. So we entered this trade here as we came out the Asian session here. Into the London session, we pulled back, entered the trade to continue the long trade. So it's just continuation trade in the direction we were already trending in. Our targets again would have been levels over here to the left. And as you can see, we have all this spare space here for price action to run into. So plenty of room for my trade to run. If we had price action like this or in this area, and then we did this would be a poor quality trade because we'd have all of this price action try and break through. But in this particular example, we're in a clear uptrend. There's white space there for us to enter. We've got target levels from previous rejection levels, etc. Or previous day highs and things like that, or other weekly targets, any sort of level where price was rejected before. This was a 2.3R trade. And then with regards to the stop loss, again, we had 2 choices here on the stop loss. We could have placed below these levels or below these levels since we entered the trade after that pullback. So to get a tighter stop loss, we kind of put the stop loss in between the two. So we had option 1 here, option 2 there, and I chose to put the stop loss in between, which matched the highs of these levels here, as you can see. So always look at the previous levels for potential turning points, because these were 2 rejection levels, so price could easily come back to this zone, if you like, or to these rejection levels, and then carry on in a trend direction like that, and we'd be fine. We were to place the stop loss here, which is also fine, which would increase our R to R, but it makes the trade a little bit riskier. Should it wish to break that down to these levels before rejecting, it might take us out. So yes, I could have probably done the stop loss a little bit tighter on this particular trade, taking us up to a 3R trade. But that's fine. You've got to choose where your stop loss is going to go. It's going to go there, or somewhere around about there, like I did. Give me 2.3R trade. And that's it. That's just another quick example, this time in a long direction, so a long trade. Okay, so in this example here, it's a long trade. We're in pound Canadian dollar trade, and it's same again. We have the 2 days general trade direction. Day 1, which was a Monday, was general uptrend. Day 2 was the Tuesday, also continuing the uptrend. So we're expecting the trend to continue, and we're just going to target the next levels. As you can see, it did indeed. So we will target equivalent levels from left, just turning points where price has turned before and things like that. Any sort of levels where you can gain a 2R sort of target. And then the entry again is just day 1, general uptrend, day 2, general uptrend. Came out the Asian session here, into the London session, we broke upwards and then pulled back. The continuation trade. Simple as that again. So we're just following the trend and looking for a reason to get in. That's all we're doing here. General trend is up, and then we're breaking a session, pull back and entry. Simple as that. With regards to stop loss here, we had these levels here, these levels here, or these levels here to choose from. So a few different choices on this example. And let's have a look. So of course we could have gone for this level as well, which actually held fine, so that might have been a better choice. I went somewhere in between and chose to go in between the 2 levels. So this would have been the best stop loss level for a greater RR. I chose to go to this level here, which was actually the low of the London low at the time and the rejection level. We could have gone these levels here, but that would have reduced my RR, making the trade invalid at the time, based on my target levels. And that's that trade, simple, and that was a 1.88R trade, almost 2R. As you can see, it continues up way afterwards. I don't tend to trade much into the New York session. I try and get all my trades done in the morning, during the London session, and be out and done by the day, by the time New York opens. If I'm not done by the time New York opens, I will most definitely have a stop loss, either pulled into half R or break even, or any other levels I can think of at the time, following price action obviously, or even closing the trade early before the before New York opens, just to catch my profits. Okay, so in this example here, you can see we're on an Aussie Swiss trade, and the 2 days downtrend is not as significant on this particular trade. We came into the setup Monday here, it's a little bit flat, but the EMAs were beginning to curve down. So by Tuesday, we established our trend direction. Admittedly not the best, but it's curving down in general trend over the 2 days. So we decided to enter this trade as per the setup. So simple again, we've got the Asian session here. As we came into the London session in the middle of the Asian here, we broke the London session. Once it pulled back, we looked for a continuation in the trend direction, and we were targeting these zones down here. The stop loss was placed above the current London high at the time, which was there, because we'd broke so far down, pulling back to here for the entry. For the trade to be invalid, it would have to break that level and we'd be wrong on the trade, and we'd take a negative R. As it was, we weren't wrong on the trade direction, and it only pulled back a little bit. As you can see, at some point, once price action was running down here, I pulled my stop loss to make that trade very low risk. We would have pulled it to half R. There we go. Once we got to around about 1R running profit, which again would mean for the trade to then lose from this point here, when it's at 1R, you'd have to return back up 1.5 Rs. So yes, it could turn 1.5 Rs and then continue in our direction. But generally, if it's going to pull back that far, you're probably wrong. And you're going to take a full stop loss, so you may as well take half a stop loss at that point as well. And it just calms my mind a bit as well. Okay, so one thing to discuss here, which we haven't yet, is where to target on your trade. Now this is just as important as knowing where to put your stop loss and when to enter your trade. If you have no idea of where you're going to target, then what is the point in entering at this point, and what is the point in putting your stop loss here? Targets are super important, and you need to know what you're aiming for. Doesn't mean you're going to reach that target. I try and target a 2R trade every time, based on the stop loss distance and the entry point. We want my targets to be a 2R, just to give it a breathing room. We also need to have space to the left for price action to run into. We don't want lots of previous price all over the place here, first to try and then force our way through. So we want white space to the left, targets in 2R, a valid stop loss level, a reason for entry, and a reason to target a level. So as you can see here, my target level was down here, approximately a 2R. You can see these blue lines I've drawn on here. This is what I do. I just mark out previous rejection levels and turning points. Now it's quite far back, these ones, so we're going to have to jump to the 4-hour to scroll back. See these blue levels here? We're just going to follow these back. And it goes quite far back. See all the white space? There's no other levels anywhere between this area where we're entering and targeting. So there's all that space to enter in. And as you can see, all the way back here, we had these candle rejection levels and a rejection there. I had to pop to the 4-hour just to make it easier to scroll back so you can see those rejection levels. But of course, if they're nearby, you can continue to do that on the M15 or the H1 or the H4. Then all I do is simply draw a ray line, normally in blue. There we go. At these candle rejections here. And those will act as my levels for me to target. It's simple as that. But very important as well, you must have targets and somewhere to target. Scroll back through to the trade. So we would have marked up this level as well if we were trading above there. Drop back down to the M15. There we go. So these were the levels we just looked at here, which gave me a valid target level. And I think it was just the blue line I just put on. I can't remember. I did just add a blue line. No, it wasn't. It must have been this one. But you'll find these are valid rejection levels. In fact, that blue line there, price action rejected, but pulled back and continued down afterwards. So that's it. Just an example again. This time showing where to target on my trades. Okay, so to recap here, all we're looking for price action to be running in the general down direction, spread over 2 days. We want day 1 to be going short. As it comes into day 2 in the Asian session here, we also want the trend to be continuing. Then as we enter the London session here, we want it to be breaking the Asian low, targeting levels below, which will be previous price action over to the left. Simple as that. We want to put our stop losses at the highs of previous levels. Our target needs to be previous levels as well. And in between that, we want a whole bunch of white space here to give us room for the trade to run through. It's a nice color. There you go. So simple as that. General downtrend, Asian session, break the Asian low in the London session, space to the left to here to enter, some sort of logical reason for a target, logical reason for your stop loss, and a minimum of 2-hour distance. And that's it, that's all I look for. I go through all the pairs in the morning, and then I'll highlight the pairs that look like they might be entering the second day of a general trend, and I will group those together into a short list. And then I'll just scroll through those pairs for the morning, just to see if they perform and give me the setup I'm looking for. And that's it. Now you know my entire strategy and what I do on a day-to-day basis to become a profitable trader. So you can go out there and try this yourself. But one thing to remember is this is not a fully mechanical strategy. It requires experience reading price action. For example, on this week's trades, 2 of my trades would have been losing trades, but with experience of reading price action, they actually came out profitable. So don't just enter the trade and leave it blindly run. Watch what the trade is doing. If it's telling you it's reversing, get out of the trade. Don't just leave it. Or pull your stop loss in a bit tighter. Or do something. You can leave it to go to -1 hour if you wish, that's fine, if that's what your setup is. Just test it and see what works best for you. Personally, what I tend to do is if price is running down to 1 hour, I will pull my stop loss to -1/2, which protects the account. So should it reverse, we only lose -1/2 hour instead of -1. But if it does pull back to the entry point, which is the break-even level normally, it also won't take me out, and it gives me that extra opportunity to carry on down to my TP. And that's it. Thanks for watching. I'll see you on the next one. Bye bye.